Joining us now is Deputy Chief Investment Officer at Bernstein Advisors, Dan Suzuki. Dan, great to speak with you.
Good to see you, Melissa.
What was today all about, Dan? What's different today versus 7 days ago?
Really not much fundamentally, and that's the thing. I think this is really more of a sentiment-driven sell-off, which is, to be expected. I think that we all knew that coming into this part of the year, uncertainty was going to be really daunting. Especially in the absence of stimulus, we knew, listening to the experts that come on CNBC, that cases were going to be picking up at a pretty rapid clip going into this part of the year. And so we're sitting here without a lot of visibility. So the market is extrapolating day to day, very little incremental news on, vaccines, antibodies, stimulus, and cases. And I think that the reality is, as you said, relative to 7 days ago, not much has really changed. So I think that this is to be expected. Really the big uncertainties out there in the market come down to COVID and stimulus. Mm-hmm. And unfortunately for the markets, both of which are going the wrong direction, at least if you want higher markets.
On the COVID front, though, things have changed. And I know I asked that question, Dan, but in terms of the European lockdowns, does that sort of foreshadow the possibility, that perhaps the U.S. is headed in that direction, or even if the U.S. itself is not headed in that direction, that it will feel the hit economically from economies tilting into recession in Europe?
Yes, I think that's right. You had, I think Scott Gottlieb was on CNBC today talking about how, Europe is like 3 or 4 weeks ahead of us. And so, the question is, the extent of the lockdowns. I think we're going to take a targeted approach. But the reality is that this pandemic and the nature of the virus, it's self-limiting. There's already a seasonal component. As things get colder, the virus is going to pick up, infections are going to pick up. But then, if you layer on the fact that we're trying to recover here, the more you recover, the more people are active and interacting, the more you have cases and the more you have to step in to sort of shut things down. And so I think that it just puts a cap on where people's expectations can be for how fast we can recover, at least until we get, past the winter.
So, Dan, it's Karen. Thanks for being on. Would you, at this point, wait for a specific level in the S&P before you would be adding to your positions in the market, or would you buy right now?
Yeah, I think, we don't tend to be sort of day-to-day traders. So, but I think that you look 6 to 12 months out, I think it's a very reasonable base case to assume that profits are going to be, higher. So I think you want to have stuff in the portfolio that has exposure and that's going to benefit from that recovery. But as I mentioned, the next few months, I don't think that we're going to get a lot more certainty in the next few months. So I think that my personal view is, rather than take, most of the market has some sensitivity to fiscal stimulus or COVID. But I think that there are areas of the market where you can go where that exposure, that sensitivity is a lot less. Like take China, for example. They don't have a fiscal cliff coming up, and they don't really have an outbreak of COVID, right? So you can have exposure to areas that are seeing a recovery without these big one-sided market driving trends out there. And so I think that, to me, right, at least for the near term, is a bit of a better risk reward.
Hey, Dan, it's Tim. Thanks for joining us. One of the things that always is going to be part of the market setup is where we have come from in terms of market positioning. Part of the recovery that happened off those March lows was not only just policymakers rushing in pretty aggressively, especially the Fed, but also where we were seeing significant amounts of cash out there. Where do you think the market is right now relative to both institutional retail positioning, especially as we go into mega cap tech Thursday, when these have been the places to hide out?
Yeah, I think overall it's a pretty mixed story, right? I think that it's hard to make the argument based on all the different positioning data and sentiment indicators that people are over the moon, but they are over the moon and really bullish in certain areas of the market, and these are those names that you're talking about. So our view has been that what people don't realize is how incredibly bearish it is to only be bullish on this handful of stocks, right? Those were the big winners during the COVID crisis, so their outperformance was completely justified. But as we turn the corner, if you think that we are going to have a sustainable recovery, why would you own those names when you can own these names that are going to see, double and triple the acceleration in their profits growth over the next 6 to 12 months? And so, I think that's where, probably sentiment is a little bit misplaced. And I think that, for us, we'd be, continue to be underweight, and we wouldn't necessarily be, adding more. I think there's a lot of people that want to add more to these positions on this weakness. That's not the area that we would be adding to here.
Dan, great to speak with you. Thanks.
Thanks, everybody.
Dan Suzuki, Richard Bernstein Advisors. Guy Adami, I thought it was interesting. Think about how incredibly bearish it is to think about how many people are so bullish about a very small piece of the market.
Yeah, and if you listen to the great Dan Nathan, that would be at-risk reversal. I mean, he talks about, simply, he doesn't say it in those words, but he mentions it all the time. I think in one way, shape, or form, we've all talked about it, the fact that the market seems to whittle down to a handful of names that's sort of carrying the load. That's a problem. With that said, I know you're a huge ABBA fan. I know Tim is. And tomorrow is absolutely the market's Waterloo. And yes, if that song comes on, I absolutely turn it up. And absolutely tomorrow is the Waterloo for the market. So, again, I think you're going to get decent numbers. I think 3209 the S&P trades down to. I think 40 might be a short-term top in the VIX. And maybe tomorrow we get that bounce that everybody wants.
Shepard Smith here. Thanks for watching CNBC on YouTube.